Hey investor friends, I'm Michelle Markey and welcome back to my channel. Today I'm going to summarize the highlights that stood out to me and the wisdom from the greatest of all time investors, Warren Buffett and Charlie Munger, from the Berkshire Hathaway annual meeting that happened on Saturday, April 30th, 2022. And as many of you know, I attended the meeting in person, but to be totally honest with you, I'm not the biggest morning person. So I just sat there and absorbed the experience in awe of the greats. And then later on, I went back and listened to the meeting again and typed up transcript-like notes so that I could bring you my key takeaways. So if that sounds good to you, please be sure to like and subscribe to my video and YouTube channel, and let's get into some of these highlights. The biggest theme that stood out to me was how Buffett emphasized trust among Berkshire shareholders, partners, employees, and pretty much all stakeholders that are involved with Berkshire. And he was reflecting on how over 3.5 million shareholders receive Berkshire materials. And he said, that is a lot of people that trust us. And he said that they have an extreme aversion to incurring any permanent loss on your funds because he wants you to be safer with your investment with Berkshire and to not have a terrible result. And that's a pledge they live by. And while I wasn't the most awake, early on in the meeting, I immediately latched onto how Buffett said that they haven't repurchased any shares at all in April. And he actually talked about buybacks again later on in the meeting Q&A. And then someone asked and tried to estimate the buyback rate of what Berkshire was doing in buying back shares. And they thought that maybe Buffett might be buying back shares at a rate of $3 billion a month when Berkshire's trading at 20% off of its intrinsic value. And then maybe $2 billion a month when it's trading at 10% discount to intrinsic value and so on. But then Buffett told the guy that he was totally wrong on that and that it all depends on what opportunities there are in front of him. And if there's better opportunities to invest the money instead of buying back shares, then they would do that. But it's interesting that someone was trying to figure out if there's any correlation between what Buffett believes is the intrinsic value of Berkshire and what the possible buyback rate might be. But it doesn't look like it's an exact science. But either way, the main takeaway to me was that Buffett felt that maybe Berkshire reached its full intrinsic value as of April 2022, because at the end of March 2022, Berkshire A and B reached its highest prices ever, at Berkshire A trading at $545,000 and Berkshire B at $362 a share. And then now in April, it drifted down toward the 480K to 530K range for Berkshire A. And then for Berkshire B, it was between $323 and $353 a share. And now, as of mid-May 2022, the shares are trading with Berkshire A around 460K per share and Berkshire B around $310 per share. But either way, we can see that we might be getting a discount to Berkshire's current intrinsic value. And of course, it's subject to change. And you also have to look at where Buffett is continuing to put money, which includes how he spent $11.6 billion on the Alleghany Corporation acquisition, which I know hasn't been completed yet. And then also they're currently at 9.5% position ownership in Activision Blizzard, but he alluded to how they may be increasing that ownership because that was sort of a potential workout / arbitrage opportunity. So maybe something to pay attention to there, as well as how Berkshire seems very enthusiastic about continuously buying oil and gas companies like Chevron and also Occidental Petroleum. So if we pay attention to some of what Charlie Munger alluded to with oil and gas, there might be something going on there, and you have to decide if any of these investments are within your circle of competence before you were to make investments into either Berkshire Hathaway itself or some of the other equities that they're buying or other companies that they're wholesale acquiring. And then Buffett talked about how Berkshire will always have a lot of cash on hand because they believe in having cash so that Berkshire is strong and the businesses are secure. And Buffett said when he says cash, he doesn't mean commercial paper, because back in the 2008-9 financial panic, Berkshire didn't own anyone's commercial paper nor any money market funds. They own treasury bills, and Berkshire is basically trying to remain a strong financial fortress. And based on their report, reports, I know that they now like to carry at least $30 billion of cash. And until recently, that used to be only $20 billion of cash. So clearly Buffett has a strong affinity for holding on to cash. And he said that Berkshire is stronger than the banks. And then he also put up a couple of slides of some $20 bills where he said that this Federal Reserve note is legal tender for all debts, public and private. So if you look down here, you can see that this is what makes it money, the fact that it's legal tender. And so he was sort of throwing some shade on some of the cryptos, and Charlie Munger especially had some memorable quips about that I'll mention later. But it just goes to show how much there is importance attributed to legal money, which used to be issued by individual banks. Like he also brought up an old $20 bill that also had Andrew Jackson's face on it that used to be issued by the Bank of Rockford in Illinois, but now it's been centralized by the Federal Reserve. And he tips his hat off to Jay Powell because he did what he needed to do during the last couple of years when the Federal Reserve printed money and gave it out. And although we've seen the inflation that's resulted from it, he said that that was pretty much to be expected when there's more dollars in circulation than there are goods. And he also mentioned how there's almost $2.3 trillion of cash in circulation. And that's up from 10 to 15 years ago when we had $800 billion of currency in circulation. So it's kind of no wonder we're having as much inflation as we do now. And Buffett told the story of when he was a newlywed at age 21, and he and Susie stayed at the Flamingo in Las Vegas, and he observed people gambling in a mathematically unintelligent way. And he figured, unlike gambling, it's a great way to get rich if you can figure out a way to insert yourself into the system. As in, if you're the casino owner and able to profit from people gambling, then that might be one way to get rich. And also he said that stock markets are kind of like a gambling parlor where companies are sometimes being treated like poker chips. And that's how Berkshire Hathaway was able to get a 14% stake in Occidental Petroleum in the span of 2 weeks. And there was a 40% block of Oxy that's owned by the index funds. But otherwise, he basically said that a lot of people were just trading Oxy and not really owning it for the long term. And Charlie quipped with how we've got computers with algorithms trading with other computers, and we've got people who know nothing about stocks being advised by stockbrokers who know even less. So I thought that was just amazing and awesome how Buffett and Munger commented about the casino-like environment in the stock market lately, and hopefully it will get better and stocks will go on sale even more. And then one shareholder observed how Berkshire's Burlington Northern Santa Fe and GEICO seem to be losing ground to their competitors of Union Pacific and Progressive, respectively. And then Greg Abel's response was sort of just like, we're continuously improving. And then Ajit Jain basically said that Progressive has used telematics for the last 10 years and GEICO is starting to implement them. So basically, even though I don't know if they had the best responses to this question, if it inspired that much more confidence, but they basically said that they're trying to get better at this. And then Buffett said that he and Charlie have blind spots and they need to be careful about criticizing others who have them. So I guess I also don't want to make it seem like I'm trying to criticize Greg or Ajit, but I kind of was hoping for a little bit more. And then Buffett also said, is it wise to criticize people? And Charlie quipped, probably not, but I can't help it. So I think that this should probably just be some constructive criticism of where maybe there's something to look at as to whether GEICO and BNSF can compete better with some of their strong primary competitors, and let's see what happens. And then another shareholder that I got to know, whose name is Rajiv, asked, how do you time the big market moves so well? To which Buffett responded that they haven't the faintest idea what the stock market is going to do when it opens on Monday, and they've never timed anything. And he claims to have never had insights into the economy, which I don't totally believe that, because I think that Buffett is really astute when it comes to economics. And then also Buffett said that he would bet on the monkeys better. So I kind of think that, as a lot of academics have written about, where a lucky monkey such as Buffett could do well, maybe there's something to the fact that Graham Stephan is using a monkey to pick stocks. So maybe Buffett would approve of that approach, but he's sort of being a little facetious. And I think that through being prepared, as Buffett talks about later, you can then be open to opportunities when they manifest. So it's not so much about market timing timing, but more so about having studied the companies you're interested in and understanding the industries in which they operate. And then when you're given a big fat pitch, as in a baseball pitch, then you're able to know what your sweet spot is and what price you want to pay when your favorite company might go on sale. And on a somewhat grim note, given the ongoing conflict in Ukraine, someone asked about nuclear risk and insuring the catastrophic losses that could happen on this magnitude, to which Buffett said that they have no solution for it. And Ajit Jain chimed in with saying when it comes to nuclear, he basically surrenders to it because there's no way that the insurance companies can fight back against the court system that may decide that the insurance companies have to cover the damages associated if there happens to be a nuclear event. So that was somewhat sad and sobering, but definitely something to keep in mind, and how not even Berkshire, with all its money and resources, could afford to cover a nuclear disaster should it happen. And there were three young ladies that asked different questions, but Buffett and Munger gave them all comparable responses. And one of them asked, what stock would they choose that's resilient in inflation? And Buffett said that the best thing you can do is to be exceptionally good at something where your abilities can't be inflated away and nobody can take away the talents you have. So the most important thing is to develop skills so that you can have good earning power. And another person asked if Charlie could make the study of multiple disciplines more practical. And he basically said that you make a lot more wrong decisions if you don't have some command of all the disciplines, and that was pretty much it. And then another person asked about some more career advice, and then they said that basically you want to figure out what you love doing and spend most of your life doing that, and just work for whomever you admire the most. And for Buffett, that was Ben Graham, and then he figured out the person he likes working for even more was himself, and then that's what he did. And he and Charlie both had their own partnerships for a while, and then they also worked in Buffett's grandfather's grocery store. And Buffett seemed like he had to work there, but Charlie Munger didn't really, because he said his father gave him enough of an allowance and he kind of worked there as a lark, which means to be on a quest for amusement or adventure. And basically Charlie just wanted to experience what that work was like, even though, to Buffett's surprise, working 12 hours a day was something that Charlie just did for fun. So you can see that between the two of them, they're super hard workers and they figured out what they love doing and what makes them happy. And Buffett even talked about how this type of work makes him happy. So you just got to figure out what you enjoy doing and what makes you happy. And I know that sounds simpler to say than it is doing in real life, but hopefully we'll all get there. And Buffett reflected on Berkshire's culture, where he said that the ideal shareholder group is the one that they have today, and that Berkshire is built for forever and that there's no finish point. So along those lines, he sees Berkshire Hathaway as a painting where he gets to paint, and if he makes a mistake, then he goes back and paints it again. And he talked about how he realized when he was around 19 or 20 that he'd been doing investing all wrong, and he stumbled into what he believes is the better way to invest when he read a chapter in Ben Graham's The Intelligent Investor, and he kind of likened that to optical illusions, or what's called an apperceptive mass, where you could choose to see a vase or two faces in this image, or also a rabbit or a duck. And he kind of wonders, why didn't he realize certain things sooner? But he said that it's actually better when your insight produces a change in your behavior, so that, like Charlie says, you can correct your own mistakes. And so those are some of the key takeaways that Buffett and Munger ascribe to really good principles, and they're always continuously learning and trying to get better and to try to fix their mistakes so that everyone has better outcomes. And when Charlie was asked, how does he evaluate the clear dangers of investing under authoritarian regimes, as recently evidenced by Russian atrocities in Ukraine, Charlie answered that there's no question the Chinese government has worried U.S. investors, and the resulting tensions have affected the prices of Chinese internet stocks. But he said that there are some hopeful signs, and he invested in China because he got into much better companies at lower prices, and that was basically it. So he's willing to take a little political risk for the potential upside there. And also, it's interesting how normally Charlie is the one who has nothing to add, but this time Warren Buffett is the one who had nothing to add. And he also said how he knows the Chinese people revered their wise elders, and Buffett is still trying to catch up to Munger. So maybe that was alluding a little bit to how Buffett might be open to the potential investing opportunity there, but is not yet comfortable to make a leap into the Chinese investment area. So let's see what happens if Berkshire might invest in China some more or not. And also later on, Charlie said that he would rather live in California with all its gerrymandering than in Russia. And on the hot topic of Bitcoin and cryptos that Becky Quick brought up toward the end of the meeting, Buffett explained the difference between productive assets and something that depends on the next guy paying more than the last guy got, which is the greater fool theory. And Buffett said that if you own farmland and apartment houses and offered him a 1% interest, he would offer you $25 billion for each. But if you owned all the Bitcoin and offered all of it to him for $25, he wouldn't take it because he said, what would he do with it? He'd have to sell it back to you one way or another. And his reputation is such that if Buffett is selling out of Bitcoin, then probably a lot more people would lose confidence in it. So he doesn't even want to go there. And then Charlie Munger chimed in with some of the best comments of the day, where he said in all his life, he tries to avoid things that are stupid, evil, and that make him look bad in comparison to somebody else. And Bitcoin does all three. So that got a lot of laughs. And in all seriousness, Charlie continued with some things like how, first of all, it's likely to go to zero, and I won't bore you with more of the details, but he said that we were dumb for not banning it, and he kind of admires China for banning Bitcoin already. And Buffett said that of all the things that we said today, remember that Charlie spoke last when 25% of the country gets mad at them. And so that's basically what they had to say on this subject. Finally, Buffett and Munger shared so much wisdom in over 5 hours of Q&A, but the one thing I want to leave you with is something that Buffett has talked about in the past, which is that if you've been lucky to have won the Varian lottery, such as being born in the US, and you've had good fortune shower you with all kinds of good things, then you ought to be a better person in the second half of your life than in the first half. And so he said to enjoy the second half. And if you enjoyed this video or learned something, please like and subscribe. And I wish you well on your journey to being the best investor you can be. Till next time.